Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Really looking like a pretty interesting time ahead now over the next sort of 3 to 4 weeks for the US equity market. You've got earnings season coming up, which will be very interesting to see if the current sort of valuations can be justified by the earnings going forward. You've obviously got the ongoing talk about the Fed as well and the potential of a rate increase before year end. Certainly the recent data was possibly a little bit on the soft side. Non-farm payrolls were just over 150,000 for the month. But again, if you look at the average there for the sort of 12 months, you're still running at about 180,000 per month, which is still a pretty good rate. And it's just going to be very interesting now to see whether the rest of the data can sort of back that up. And the Fed seem to be setting up the market for a rate increase before year end. Obviously, on the political front, it would appear the Republicans and Mr. Trump just seem to be sort of jumping out of one frying pan into another. He's certainly struggling in the polls. Led his presidential debate. He didn't come out of that too badly, but obviously the events that sort of led up to it are really pretty damaging, and it's very tough to see how he's going to come out and win the election now in November. Oil is still sort of pushing above that sort of $50 a barrel, with OPEC looking to sort of hammer home these sort of production cuts. And it's just going to be interesting now, say, to see whether they can be sustained, and going forward into sort of 2017. If you do see oil above $50 a barrel, it's going to be interesting to see how the sort of US shale industry sort of takes that, and whether they just turn on a few more taps just to increase a little bit of supply, which should obviously force the price down. Here in New Zealand, still a little bit of debate on the sort of housing market. Evidence appears to be that housing market is cooling down just a little bit, which is obviously what the Reserve Bank wants. But whether we see a further rate sort of cut from New Zealand, it's really sort of 50-50 at the moment. Certainly the economy is sort of pushing on at a pretty reasonable rate. You've got pretty decent growth going forward at just over 3%. As always, New Zealand investors looking for income. Current bond offerings in the marketplace. You've got Z Energy with a 5 and a 7 year bond. They got minimum rates on those. Minimum for the 5 years 3.9 and 4.2 for the 7 year. Now it looks like if they were set, they would be a little bit higher than that, so possibly a little bit of higher return. But it's still sort of pretty low historically when you compare with sort of 5 and 7 year rates, sort of 4 years ago. But as discussed here many times, there are other options out there for income. And if you are looking for income, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.